Welcome back to the channel, everyone. Today we're taking a closer look at one of the most talked about currencies in Southeast Asia, the Vietnamese Dong. Over the past several weeks, renewed interest in Vietnam's economy has sparked widespread discussion among investors, traders, and market observers who are trying to understand what lies ahead for the country's currency. While many online posts continue to speculate about a dramatic revaluation of the Vietnamese Dong, it is important to separate verified economic developments from rumors. According to recent official statements and market analysis, there has been no announcement from the State Bank of Vietnam confirming a one-time revaluation or a sudden change in the country's exchange rate policy. Instead, Vietnam continues to follow a managed exchange rate framework designed to support economic stability, control inflation, encourage exports, and maintain confidence in the financial system. This means that while the value of the dong can fluctuate against major international currencies such as the US dollar, those movements are generally influenced by market conditions, trade flows, monetary policy, and global economic developments, rather than by a surprise government declaration. Vietnam's economy continues to demonstrate remarkable resilience despite ongoing uncertainty in the global marketplace. The country remains one of Asia's fastest-growing manufacturing and export hubs, attracting multinational companies that are expanding production facilities and diversifying supply chains. Over the past several years, Vietnam has become a leading exporter of electronics, smartphones, computers, textiles, footwear, furniture, agricultural products, and seafood. This broad industrial base has helped support employment, strengthen exports, and attract billions of dollars in foreign direct investment. Many international corporations continue relocating portions of their manufacturing operations to Vietnam as businesses seek to diversify beyond traditional production centers. Analysts believe this trend could continue supporting long-term economic growth and enhance Vietnam's position in the global economy. One of the biggest reasons investors continue watching the Vietnamese Dong is because of the country's expanding role in international trade. Vietnam has signed numerous free trade agreements with major economies around the world, giving exporters greater access to international markets while encouraging foreign companies to establish operations inside the country. Strong export performance helps generate foreign currency earnings, which can contribute to exchange rate stability over time. However, economists also point out that no single factor determines the value of a currency. Instead, exchange rates reflect the combined influence of exports, imports, inflation, interest rates, foreign investment, government policy, and global financial conditions. The State Bank of Vietnam continues monitoring these factors carefully as it manages monetary policy. Unlike countries that allow their currencies to float completely freely, Vietnam uses a managed exchange rate system in which the central bank can intervene when necessary to reduce excessive market volatility. This approach provides policymakers with greater flexibility during periods of global uncertainty, while helping businesses operate within a relatively stable financial environment. Analysts note that maintaining confidence in the currency remains one of the central bank's highest priorities because exchange rate stability supports investment, trade, and long-term economic planning. Recent developments in the global economy have created additional challenges for many emerging market currencies, including the Vietnamese Dong. Higher interest rates in major developed economies, fluctuations in global commodity prices, geopolitical tensions, and changes in investor sentiment have all contributed to periods of increased volatility in foreign exchange markets. When the US dollar strengthens internationally, many emerging market currencies experience temporary pressure as investors shift capital toward dollar-denominated assets. Vietnam has not been immune to these global trends, but economists emphasize that the country's economic fundamentals remain relatively strong compared with many other developing economies. Inflation also remains an important factor influencing monetary policy. Vietnam has generally maintained inflation at manageable levels, compared with many countries that experienced significant price increases following the global pandemic. Stable inflation helps preserve purchasing power, supports consumer confidence, and allows businesses to plan investments more effectively. The central bank continues balancing its objectives of supporting economic growth while preventing excessive inflation that could weaken financial stability. Many analysts believe this balanced approach has contributed to Vietnam's reputation as one of Southeast Asia's more stable emerging markets. Foreign direct investment continues playing an increasingly important role in Vietnam's economic development. International companies continue announcing new investments across manufacturing, technology, renewable energy, logistics, and consumer products. These investments create employment opportunities, expand industrial capacity, improve infrastructure, and increase export production. As more multinational corporations establish long-term operations within Vietnam, demand for local goods, services, and labor continues rising. Although foreign investment alone does not guarantee currency appreciation, sustained investment inflows generally strengthen long-term economic confidence and contribute positively to overall financial stability. Market analysts frequently emphasize that investors should distinguish between gradual currency appreciation resulting from economic strength and a formal government revaluation. A genuine currency revaluation is an official policy decision in which monetary authorities deliberately increase the value of the national currency within a managed exchange rate system. Such decisions are relatively uncommon and are typically announced publicly by central bank officials. At present, there has been no verified announcement indicating that Vietnam plans to implement this type of policy. Instead, professional economists generally expect the dong's exchange rate to continue adjusting gradually in response to economic conditions, global capital flows, inflation trends, export performance, and monetary policy decisions. Vietnam's banking sector has also undergone significant modernization over recent years. Financial reforms, digital banking initiatives, improvements in payment systems, and stronger regulatory oversight have contributed to greater confidence among domestic and international investors. Commercial banks continue expanding digital services while supporting lending to businesses and households. Policymakers remain focused on maintaining adequate liquidity within the financial system while carefully monitoring credit growth. Healthy banking conditions are considered essential for sustaining economic expansion and maintaining confidence in the national currency. Tourism has become another important contributor to Vietnam's economic recovery. International visitor arrivals have continued improving as global travel demand strengthens. Increased tourism generates foreign exchange earnings that support businesses across hospitality, transportation, retail, and entertainment industries. Although tourism represents only one component of the broader economy, continued recovery in visitor numbers provides additional support for economic growth and employment. Combined with expanding exports and sustained manufacturing activity, stronger tourism contributes to a diversified economic foundation capable of weathering external challenges. Looking ahead, economists remain cautiously optimistic regarding Vietnam's medium and long-term economic outlook. Continued investment in infrastructure projects, transportation networks, renewable energy, digital transformation, education, and industrial modernization could further improve productivity and competitiveness. Many international financial institutions continue projecting healthy economic growth for Vietnam compared with regional peers. Nevertheless, analysts also recognize that external risks remain significant. Slower global demand, changing trade conditions, geopolitical tensions, higher energy prices, and fluctuations in international financial markets could influence export performance and exchange rate movements over the coming months. For investors following the Vietnamese Dong, the most important takeaway is to rely on verified information rather than speculation circulating across social media platforms. Claims predicting extraordinary exchange rates or guaranteed overnight currency gains should be evaluated carefully against official announcements and credible economic analysis. Currency markets are influenced by a wide range of interconnected factors, and sudden dramatic changes are relatively uncommon under managed exchange rate systems. The State Bank of Vietnam continues emphasizing stability, gradual adjustment, and sustainable economic development rather than abrupt policy shifts. As Vietnam continues strengthening its manufacturing base, expanding international trade relationships, attracting foreign investment, and modernizing its financial system, interest in the Vietnamese Dong is likely to remain high among investors worldwide. The country's long-term economic story continues attracting attention because of its consistent growth, expanding industrial capacity, improving infrastructure, and increasing integration into global supply chains. While no official currency revaluation has been announced, Vietnam's ongoing economic progress will continue shaping expectations for the future direction of the Dong. Investors, businesses, and policymakers alike will closely monitor inflation, interest rates, export performance, foreign investment, and global market conditions as they assess the outlook for one of Asia's most dynamic emerging economies. As always, the best approach is to stay informed through official government releases, central bank communications, and reputable financial analysis, rather than relying on rumors or unverified claims. By focusing on confirmed developments instead of speculation, investors can make more informed decisions, while better understanding the factors that truly influence Vietnam's currency and economic future.